Okay, so by this point in your trading journey, you have a great idea of everything you need to know on the technical analysis side. You know how to break down a price chart, you know how to analyze market movement, you know structure-based trading, the combined technical score system, Fibonacci-based trading. You also know a handful of advanced patterns that you can use to extract money out of the market. Well, now is the most crucial step in your trading, and this is the backtesting step. Now, the backtesting step is so important because it's going to allow you to see A, is my trading strategy profitable? And B, if it is, how profitable is it, or what can be taken away, what can be added to make it even more profitable? More importantly than that, just pure profit is just the psychological effect that backtesting has on your trading. Uh, Initially, when you're learning these patterns and you're looking through these setups, you're basically taking my word that they work. You know, Akil is here telling me that a cipher pattern works. When the market does this and then that and then this and then that, I should sell because Akil said I should sell. But you really don't have that belief system for yourself. As you complete your back testing and you go through trade out of trade out of trade, hundreds of trades, you start to see the same patterns or the same setups occur over and over again, and you really start to build on that belief system because, well, you see it for yourself. And when you're done keeping stats and you look back through your last 100 or so trades, you're seeing that, well, I found 100 ciphers within the last year and 75 of them won. Wow, this thing really does work. And that's going to help a lot when it comes to trading live because now you're not going to have that hesitation. Traders that don't backtest, they'll see a pattern complete in the live market, and they'll hesitate because there's a little bit of fear there. You're saying, well, all right, this is it. This is everything Akil said. It's at the 786. I'm supposed to sell right now. But how do I know it's going to roll over? That's a big candle that hit it. It looks like it may not. And before you know it, that trader doesn't involve themselves in the trade and they miss the opportunity. Or they'll involve themselves in the trade and they'll do everything correct. They'll enter the trade, they'll put their stop loss on, they'll set their targets, and then the market will maybe go sideways or go a little bit into the red, and they'll start saying, "Oh, this one doesn't look like it's going to win," and you don't have that confidence and that belief to see the trade out and see it through to your targets and to your profit levels. So doing that back testing builds on that belief system. It allows you to not only have a system with strict rules of engagement, but allows you to have belief in that system, which is going to allow you to take every opportunity, which will allow you to become a consistently profitable trader. Now, the one other good thing about backtesting is it also builds on the RAS, your reticular activating system. Because you're going through so many charts and you're finding so many examples of whatever strategy you're testing, it really starts to get that pattern or that setup really starts to get ingrained in your brain. And it's like, you see it over and over again that it's just going to begin to pop out to you. It's like, for example, when I was younger, they used to have these books or these pictures called Magic Eye, where at first glance it wouldn't look like anything, but when you stare at it a certain way, you can see there's like a hidden message in there, a hidden picture or a hidden word. And the more and more you look at it, the easier it is for that word to stand out. So at first glance, you're staring at this picture and you're looking at it for 10 minutes and you're like, I don't see anything. Your friend's like, no, it's right there. And you're like, dude, I don't see anything here. Then once you see it, then you become that friend where you're scrolling through, you're showing your new friend, and he's looking at it like, all right, man, you're crazy. And you're saying, no, look, there's the message right there. It gets easier and easier to see. And we see this a lot in trading as well, where you'll get a rookie trader or a newer trader that looks at a price chart, and you're like, oh, man, do you see that Gartley? And he's like, no. And then it takes him a good maybe 10, 15 minutes to find it. Whereas an experienced trader, one that has that RAS trained, that Gartley pattern is going to pop out to him. Now that takes a while to train that, but the quicker you can get started on that, the easier it is, and well, it's gonna allow yourself to have that much more time before the trade happens. So if you happen to be a day trader, we know that the markets move pretty fast. You may be on a 5-minute chart, and well, you may only have a minute or sometimes seconds between identifying a pattern and getting involved. So if you're a newer trader that still needs to go through their checklist and say, okay, well, I have this, all right, well, I have that, well, all right, this, that, can't really see, before you know it, you missed the trade. However, once you train that RAS, it's going to allow you to see the pattern so much quicker. So you're, boom, Gartley, it's right there. Get my entries on, get my stops on, and you'll be able to catch the trades. But back to the backtesting. I'm going to show you guys how to set up a backtesting, a basic backtesting chart. And I'm using a regular Excel spreadsheet. I'm not a real fancy Excel guy, so I'm not good with coding it and making it do things automatically. But I want to show you some of the things that I look for when I do my backtesting, and well, give you guys an example of how to set up a chart. The first thing I want to do is the date. When did I take the trade? And this is going to be a big help. One of the biggest mistakes that I made in my trading when I first started doing my backtesting was I didn't keep track of the date or the time. And I didn't think I needed it because, well, I was only going to do my backtesting once and never run through it again. Unfortunately, after I did my backtesting the first time on a certain pattern, I got an idea. Well, what if I add this instead of that to the setup? Would that make it more efficient? And because I didn't have the date or the time, well, I wasn't able to go back and identify the same patterns that I did the first time, and I had to basically start all over from scratch. So make sure you add the date and the time. In the beginning, it's going to save you a lot of pain when going back, and if you have to make any additions or subtractions from your plan. I always want to put the pair. Now, what I recommend doing is when I backtest, I'll backtest one pair at a time. So I usually have a separate Excel spreadsheet for each pair, and then I kind of combine the stats later. But make sure you put the pair down as well. So date, time, pair, same thing as far as system goes. You should be backtesting each system or strategy separately, but if for some reason you're not, you're using the same sheet, make sure you keep track of what exactly are you trading. Am I trading a CTS? Am I trading a bat pattern? Am I trading a Gartley? What have you. After that, I want to have entry. Where am I entering the market? And you can also put entry reason. So let's actually fill some of these in. The date can be, let's say, what is today? September 23rd. Time, 8 o'clock. Pair, euro dollar, system, let's say Gartley pattern. Let's say bat pattern. Entry. Entry's at 13025. Reason for entry. You can make this even entry technique. 88.6. So I entered a bat pattern at the 886 each time, or you can just put how did you enter? Did you enter on a double top? Did you enter on a higher high, higher close? Did you enter on an aggressive limit order? You can keep track of what your entry reason was. Next, we have stops. Where's my stop loss at? Let's say 1.3050 for my stops. Same thing. Reason for stops. Why were my stops at that point? Where were they at? Were they at 113 Fibonacci inversion? Were they at an ATR? You want to keep track of this. Because if you're noticing that, hey, maybe the 113 isn't working good, maybe you go back and keep track of the same setup, but using an ATR based stop and see what works better. So next is going to be targets. Target 1. Where is target 1 at? Target 1 is at 1.2995. Same thing. What was target 1? Well, in this case, target 1 was the 382 retracement, 38.2. Target 2. $1.2980. And what was the reason for that? The 61.8 retracement. So now you have your basics. You have your date, your time, your pair, your system, your reasons, your stops, targets, and everything you need to know about when you originally entered the trade. Next, we want to do our evaluation. You know, obviously one is, did it win? Did it lose? Was it break even if you have a rule that gets you stopped out for break even? Was it a break even? If I can spell right. Break even. Was it a break even trade? Next thing I want to know was, obviously we know if target 1 was hit or not, but we still want to keep track of that. Was target 2 hit? If so, target 1 profit, target 2 profit. Now these are important because, well, let's just say for some reason you're trading and your target 1 profit is significantly larger than your target 2 profit. What does that say about your system? Well, if that's the case, right away that tells me if I'm consistently making more on target 1 than target 2, and this is after you crunch all the numbers at the end, well, then it's not really worth trading a target 2, because I would make more money if I took the entire position off at target 1. So that's why we want to keep the profit amount for target 1s and target 2s. We also want to keep track of our drawdown. If it's a loss, what is our drawdown? What is our total losses? And remember, we're trading 2 positions, so when you do the total of this, your drawdown, you got to times that by 2, meaning if we take a loss for 10 pips, we're really losing 20 because we have 2 contracts on. Remember, if you're trading 2 positions, you're taking half off. You're starting with a 2-position contract. You're taking half off at target 1, half off at target 2. However, if you take a loss, you're taking a loss on 2 positions as well for your drawdown. So you want to make sure to track that the correct way, because if not, it's gonna skew your numbers by quite a bit. So in our second section, we have win, loss, break even, target 1, target 2, target 1 profit, target 2 profit, and drawdown. I also like to have after this, well, what's our trade total? Did we make money off the trade? What was the total result of this trade? Was it 100 pips? Was it 10 pips? Was it minus 40 pips? What was the total? And then lastly, what I'll do is I'll create a section. If I can, there we go. I'll create a section where I keep track of alternate strategies. So I'll ask, my original targets are, say, 382 and 618. That's what my rules say. Whenever I trade a bat pattern, my target 1 comes off at the 382 retracement. My target 2 profit comes off at the 618 retracement. Well, what if I want to test out different targets? Over here, I would put, say, 78, or let's say this. Let's say 50% target. 78.6 target. 88.6 target. And you guys can use whatever you want. This can be structure, this can be ABCD pattern completion, this can be a Fibonacci extension, any other target that you want to test. Take my advice, test that at the same time while you're doing your original testing. Again, this is something that I would run through years and years of data. I'd go back years and years on my charts and test the system out. And then by the time I'm finished, I'd ask myself, well, I wonder if I wait for the 50% retracement to be hit before the 382, would that make me more money? So I'd have to go all the way back to the beginning, 5 years again, and then retest that. All right, so the 50% does work better. What about the 127? I wonder how profitable that would be. All right, let me go back again. Test it, test it, test it. And before I know it, I'm spending months back testing the same exact thing where I could have just done it all at once. So I recommend trying to get as much of it as you can done in the initial testing. It's going to take a little more time, but it's not going to be as tedious as going back over and over again. Trust me. So I advise keeping tracks of different target levels. You know, we talk about the traditional targets being the 382 and the 618. Well, that doesn't mean it's the best. Just because I'm telling you that's where the traditional targets are, doesn't mean you have to take it there. I would test out, what if I extended target ones a little bit? Would that make me more profit? What if I extended target twos a little bit? Would that make me more profit? And by having all these numbers, when you're done all your back testing, you can literally just look at the numbers and add it up to see. Well, the 50% makes more money. A great example is this. In my live, I treat my live trading room, or my day trading, I should say, a lot differently than I do my swing trading. In my swing trading, my profit targets are always the 382 and always the 618 for the bat pattern. My first half of my position comes off at the 382 retracement. The second half of my position comes off at the 61.8 retracement. However, in the live room down on the 5-minute charts, my day trading, my first target comes off at the 61.8. So you can see it's a little different than my swing trading. And I made this change after my back testing. Well, I saw that, during my testing, I saw that the 618 is hit almost the same amount of time as the 382. Now, yes, I am going to involve myself in some more losing trades because, well, there are certain times where the 382 is hit and then the market will bounce back up and go on in a different direction. So there are trades that would have won on the 382, if I were taking the 382, that would have lost by taking the 618. But overall, when I crunch the numbers, even though the 618 gives me a lower win percentage, it's more profitable at the end of the day. And for me personally, I'm not really worried about having a certain win percentage. To me, it's about making money. So in my day trading, I made the adjustment with my targets that I shoot for, and it's been pretty profitable. Now again, even with that, I have strict rules for that, so don't just trade it because I'm saying the 618 works better on the 5-minute time frames, but test out different scenarios for yourself and see what's the most efficient one to use. Same thing with stops as well. You can test out alternate stops. If you're using, say you're trying to decide between using an ATR based stop loss versus a 113 Fibonacci inversion stop loss. Well, you want to have both of those numbers available in your back testing because, well, if you're consistently taking less of a loss by using the 113 and it's not stopping you out of too many trades that maybe just touch it and go on to be winners, well, if you can eliminate, say, 10 pips per loss, think about how many trades you're taking in a year, and those 10 pips add up. Maybe you save yourself 100 pips over a month. Maybe you save yourself over 1,000 pips over a year just by taking a little bit less on each loss. Stuff to think about. Again, whatever idea you have in your head, whatever is going through your mind, saying, "Oh man, what if this happened? Or what if I try this?" You want to put that on your back testing spreadsheet, and you want to try that out. So, this is again a basic back testing spreadsheet. You want to have the obvious stuff: date, time, pair, strategy / system, entry, stops, targets. Then the main stats: did it win, did it lose, break even, how many times was target 1 hit, how many times was target 2 hit, what's the total profit from each target 1 and target 2, what is my total drawdown, and of course, what is the trade total? Is this going to be a positive number? I would hope it is. If it's not, then you probably don't want to be trading this system. But you may find that certain pairs have better results than other pairs. And well, when deciding to make a trading portfolio, when you're deciding that you only want to trade 4 pairs, maybe maybe that allows you to eliminate, say, a dollar yen and put in a pound yen because, well, during your back testing, a pound yen was much more profitable. And then lastly, on the side, you want to have whatever else you want to test, whether it be alternate targets, alternate entries, alternate stops. You want to test that all at the end, and like I said, try to get that out the way at the same time so you don't have to do the same testing over and over again. Now, as far as the actual back testing goes, I always get the question, Akil, do you use some type of mechanical system that does it for you? And my answer is no. I simply scroll through the chart one bar at a time. Some platforms will actually have something called bar tick replay, something where you can record a day's movement, and then you can go back and you can go back and basically the price action on the chart will mimic what it did during the day, but you can increase the speed. So instead of, if you're a 4-hour trader, instead of having that candle form in 4 hours, you can speed it up so it forms in 4 seconds or what have you. But basically, you're going to do this. You're going to scroll through a chart one bar at a time. You're going to draw out, hey, here's my impulse leg. We could have an advanced pattern setting up. Looks like we're retracing some. Let me draw on a Fibonacci retracement. Swing low to swing high. Looks like the market came down to the 50%. This means I need to be on bat pattern alert. What do I need next? Well, I need at least a 382 Fibonacci retracement back up. Oh, looks like the market retraced a little deeper. Give me a potential Gartley pattern. What do I need for my Gartley pattern? Well, I need a 618 on a C leg. Do we get one right here? Looks like we do. We come right back up to our A leg. And then boom. Let's say we have our pattern completion down here. Where did I enter at? Oh, I entered at my 127 Fibonacci extension. So I entered right at 95.19. Where do my stops go? Take my 113 Fibonacci inversion. That's going to put my stops right here. Well, let me also test out an ATR. What if I use an ATR stop? Well, my entry is going to be right here on this candle, 95.19, which gives me an ATR of 10. Let's get 10 pips below, or 10 ticks below our X leg, which in this case is going to be the exact same thing. Let's say an ATR stop was lower at 94.90. Let's test it out too. Let's project our potential targets. So let's take our Fibonacci retracement. Let's go from, let me delete some of this. Let's go from our A leg to our D leg. And I see that my target 1 is going to be right here, 382. My target 2 is going to be right here at 618. Let's see if this trade becomes a winner. Well, looks like it spikes down, hits my 113. So I'm going to get stopped out. Looks like my ATR stop would have been stopped out as well. And then we enter this in our data and we keep scrolling through looking for the next opportunity. So you can see it's very tedious. It's very tedious, but it draws your eyes to these patterns, and again, it builds that RAS. So by the time you start trading live, these patterns should stick out in your mind very easily. Now, here's what I advise the process that you do. I always get the question, how much do I need to backtest, Akil? And well, there's no set number, but I would do enough backtesting until you're up at you're up at night dreaming about it and stuff, and until the wife or the husband complains that you're mumbling about Gartleys and bats inside your sleep. But honestly, you wanna do at least a couple of years, and this is going to depend on what time frame you're trading. If you're on a higher time frame, say a 4-hour time frame or an hour time frame, you wanna go through a couple of years, because well, price action changes throughout time. So you want to get a good overall amount of data to see if your strategy works through trending markets, consolidating markets, and whatnot. If you're on a 5-minute chart, then you probably want to do about a year, or at least about 6 months. At least about 6 months. A good goal to shoot for is about at least 100 trades, if I had to tell you. At least 100 trades, but really, you should be doing it until these patterns really start to make sense to you. And I think 100 trades will give you a good enough sample size. Now, after you're done your back testing, you don't just get straight into trading. What you need to do after that is what we call paper trading, or demo testing. So you've already scrolled through the markets, you've scrolled through past data. Now you need to spend some live time in the markets trading on a demo account, or just pretending that you're trading, because it's a lot easier to see these patterns while you're back testing than it is in real life. For example, looks like we have a bat pattern right here. We could be scrolling through and say, oh, what do you know? Look at that. That looked like a bat. Hey, what do you know? That was a bat pattern. Look, rolled over. Would have just hit target one. This would have been a winning trade. However, in real life, you may have entirely missed this. So after you have that RAS trained from your back testing, you want to spend live time in the market and see if you can identify these patterns or setups at the same rate. And it is a lot harder when there's nothing on the right side of your screen, meaning there's nothing over here. And what I recommend is spending at minimum 1 month demo trading or paper trading. I would, to be safe, I would say spend about a quarter. So spend about 3 months just to make sure you're consistently profitable before putting your own money at risk. But at minimum 1 month. The only other thing I would say is this: if I know some traders, they need to experience the real psychological pain that comes with trading. So if you have access to, maybe if you're saying, Kill, demo trading doesn't feel real, it's not giving me the same type of feeling as putting my own money at risk, trade a micro lot. Trade something where it doesn't affect your account. Trade a micro lot's going to be 10 cent per tick or per pip. Trade something like that where if you lose, you're losing maybe 20, 30 cent, 50 cent, maybe $1 most per trade, something like that. Trade that. That way you're not really disrupting your account. You're in no damage of I would hope you're in no damage of going into margin call, trading a 10 cent per. If you are, then you probably shouldn't be trading in the first place. But do something like that where you get to experience a little bit of pain, because you are losing or winning money, but it's not enough where you have to worry about going broke. So again, back testing, it's very crucial, very critical. I would choose to do it pick out one pattern at a time and do it. Don't try to backtest everything at once. Don't go through trying to backtest double bottoms and CTSs and Gartleys and butterflies at the same time. Pick one strategy out, whichever is your favorite, whichever sticks in your mind, whichever is the easiest for you to identify. Pick that one pattern out. Do your backtesting the right way. Do your demo trading the right way, and then you can start trading live. And then while you're trading live, and you're able to start making money, then at the same time you can be back testing the next pattern. So after you're trading a bat pattern live, you can be back testing the cipher pattern, and well, you're making a little bit of money trading these bats, and in a few months now you can add something else to your arsenal. Now you have the bat and the cipher pattern, and if you choose to add another strategy, you can do that as well, and you can just keep that pattern going until you get your fix of how many techniques you want to trade in the market. So again, take your back testing seriously. There's always a handful of people that wanna skip this step because it's tedious, and you're like, man, I can see these things, no problem. So I just want to trade right away. And I'll tell you this: that's the easiest way to go broke. And it's not even knowing that the numbers work. That's not the important part. It's the confidence and the psychological edge that it gives you. It's the belief in your system, because you've been through it. You spent hours and hours and hours testing it. You've identified over 100 trades, and you've seen the numbers happen. You've seen 7 out of every 10 trade roll over. You know what's your maximum drawdown. Well, what's the maximum amount I lost? What's my longest winning streak? What's my longest losing streak? And that stuff gives you confidence. You know, you're gonna catch a losing streak every once in a while. But if you did your back testing the right way and you saw that, well, at one point in time I lost 5 trades in a row trading the bat pattern. Well, when it happens in real life, now you're not going crazy. You're not going, oh man, the pattern doesn't work. What's wrong? What am I doing wrong? You know, you can go back to that point in your back testing and say, well, you know, I remember when back testing, I lost 6 in a row. So I know this could happen. I have nothing to worry about it. It's just part of trading. So that's back testing for you. Take your time with it. It's tedious, but it's definitely worth it. Whatever else you want to add to this spreadsheet, feel free to add it. This is just the basics I feel you need to have. But whatever else you want to add to it, add it in there and just make sure you keep track of it.